Good evening, future Maryland home buyers, and thank you so much for being here. My name is Jackie Muick, Consumer Advocacy and Website Manager for Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar and let you know that we have some wonderful experts assembled tonight. We have Shandi Hangilapola, because I'm going to pronounce things correctly, thank you, a realtor with eXp Realty. We have Pete Sotirakos, a lender with Fairway Independent Mortgage, and Frank Bamunde from Maryland Department of Housing and Community Development, also known as DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and emailed out to all attendees tomorrow. So feel free to put your pen and paper down unless you're really excited about something specific. You will be able to review all of this wonderful information at a later time if you would like to. We encourage your questions, and we are looking forward to answering them. Please post all of your questions in the Q&A box below at the bottom of your Zoom screen, and we will get to them at the different Q&A sessions throughout the webinar. And with that, I will turn it over to Shandi.
Hello, everyone. I'm going to go ahead and bring up this presentation for you guys to follow along. Please feel free to take notes as well. This is your road home. Everyone, my name is Chandni Hangalapola. You can call me Shandi for short. I'm licensed in DC, Maryland, Virginia. I'm with eXp Realty. Gary Cuff is my broker. And this is just a little bit about me, so feel free to read. But yeah, I work with buyer sellers, those who are interested in new construction. I help with first-time home buyers, military families, anyone who's looking to relocate, anyone who's just in the area, in the DMV area, looking to buy and sell, investors as well. So, a little bit of everything. And, there's some background there. All right, next. So you've already started, you're in this webinar. What you can do to explore the full home buying process is go to marylandhomeownership.com, and it gives you a thorough roadmap as well. What you'll also want to consider doing is to take a home buyer education course. You want to make sure you check your credit score. I like to use annualcreditreport.com, maybe quarterly, just to see where my personal finances are, where my credit is as well. So definitely make sure that you're on top of that as you are preparing to purchase your home. Even if it's not immediate, right? That's something that you just, again, in the background, you want to make sure that it's in good standing. And also, this is the time you want to take a look at your finances. Understand your debt to income ratio. Examine your current monthly expenses. How comfortable are you? Do you have the capacity for a mortgage that would be higher than what you're currently paying right now if you're renting or if you're trying to move up to a bigger home? So definitely examine that and determine your ideal range for monthly payment. So for example, if you were paying $1,500 in rent, or let's say 2,000, because we live in the DMV and it is quite pricey here, right? You want to think to yourself, how much more do I have? What capacity, what flexibility do I have to pay a mortgage that is a little bit more than what I'm currently paying? And what I like to tell some of my clients is as you are prepping, right, take that extra, say you're looking for a mortgage that's at a 27, $3,000 range, or maybe 3,500, wherever you feel comfortable. And whatever that difference is from what you're currently paying, try to start teaching and conditioning yourself to save that in your savings account, right? And to just like get that mortgage payment practice in. And then before you know it, you'll already have, some money for down payment and closing cost, which our friends will get into a little bit later. So next, if you are looking for a realtor, you want to make sure you know someone that you find someone that you know, like, and trust. Ask friends or families who have recently purchased for a recommendation. Word of mouth is always great. Look for an agent in your local market, right? You can also use social media as well. Learn about the difference between an agent, broker, and realtors. And, take some time, go on realtor.com, and well, not realtor.com, that's where Etor House is, but you can check out NAR, which is the National Association of Realtors, and just read up a little bit. Do some research. It's always good to do some research about the type of agent you want to work with, what the standards are, so on and so forth. If I am going too fast, guys, also feel free to just raise your hand and let me know, or come off the mic and let me know. I tend to talk a little fast at times, but hopefully we're on track. And plan to interview multiple realtors. You don't have to work with the first person you talk to. I wouldn't even suggest you work with the first person you talk to. Have a couple conversations, right? So talk to a realtor you know through a family friend, a realtor you know through work, a realtor you know or that you might have met in the grocery store. Ask some questions, right? Talk to the prepare a list of questions. Take some time and figure out, hey, what is it that is sitting and lingering in the back of my head that I really want to talk about? Is it more than money? Is it the emotional side of it? Can I afford it? Where are my strengths right now and where are my weaknesses? Who in the industry, who's a professional that can help bring some clarity to where I'm at? Talk about the written buyer agreement. What does it look like if I am working with you, right? Say I'm I'm a buyer and I meet an agent, and let's say her name is Rebecca, and I say, Rebecca, I'm interested in working with you. What does it look like if we are to go forward, right? Have them explain the terms to you. Have them explain what it's like if you guys decided to part ways, right? Be curious, ask these questions, and make sure that before you commit to a realtor, that you're confident in who you want to work with. Discuss and negotiate your realtor compensation. You are allowed to do that. If your realtor has these fees and you're doing your own market research and you realize, hey, these are three realtors. I really like realtor A, but her compensation is a little bit different from realtor B. It's a little bit higher. How can is it possible? Is there flexibility? I don't know because I'm not those realtors at the moment, but you can always start with a conversation. Negotiation isn't just for the agent. Negotiation is also for you. So no matter where you go, no matter what you do, even if you're going to Marshalls or Ross, right? Negotiate the price at all times. And choose your agent. Choose an agent that you're going to lean on and trust. Don't choose an agent because you're pressured or choose an agent because you feel like, okay, well, this is the only one I know. Don't rush yourself. Give yourself some time. Talk to someone until you realize there's a piece in our conversation or my nervous system feels very regulated when I talk with you. And if you feel that, decide to move forward because that's an indication that you trust them. So decide your needs and your budget. Make a list of everything you're looking for in a home and sort that out, right? A lot of times when we are thinking, and what I've noticed with first-time home buyers, especially, there are needs and wants, right? Oh, I need this. I need the two-car garage. I need the front yard and I need the backyard. I also need three floors. I need it at this price, right? I like to tell a lot of my clients, you want to think about purchasing and finding this next property like a piece of pie, okay? A piece of pie with three pieces: the price, location, and the style. A lot of times, 9 out of 10, I'm gonna be honest with you, right? You're not gonna find the perfect home. You're gonna find the right home for you. So, like that pie with the price, location, and style, 9 out of 10 times, one or two of these is gonna have to give. So, hey, you may have been looking for a price. That might be the piece of the pie that might need some adjusting. It might be the style of the home. A lot of people think, okay, I just want a townhome or I want a single family home or I want a condo and realize, hey, I need to go the other way. And maybe if I was thinking about a townhome, maybe I need to think about a condo, vice versa, right? Maybe you're thinking about a condo, but you realize I need to change the style of the home and go with a townhome, even when it comes to open floor layout versus ones that are more structured. So as you prepare, right, and you're thinking about what does that look like for me? What does my checklist look like? And be okay with knowing that I'm not going to find 100% of what is on my checklist. As long as I get that 80% and understand what my needs are versus my wants, then I'm on the right path. And now this is where you get ready to get pre-approved for a mortgage and to set that price range so you know, okay, now that I have all my needs and my wants, I can effectively begin searching because now I've gotten pre-approved. So you will talk to your realtor about, working with a local agent, not a local agent, a local lender. And thankfully, gratefully, we have an amazing one on this presentation with us, and I can't wait to hear from him. And so, yes, once you start that path, that's pretty much what phase one, phase two. So yeah, talk to your realtor, see if they can transition you or connect you with someone and someone's in the who's familiar with your current market. The DMV is huge. The DMV is huge, but there are so many gems around. So, you know, There's a lot of opportunity that is there. And the best part, everybody, we get to go shopping. Okay. So most of my clients, we see about 5 to 10 homes before we put in an offer, right? So I don't want you to think going ahead, oh my gosh, I got to find, I got to prepare my summer to look at 50 homes, within a month or, maybe 100 by the end of the year. No, 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 no. It's not that much. When you're working with someone who understands your needs and your wants, a lot of times I've had clients where we see a home and they know, okay, this checks off 80% of my list. Let's put in an offer and get the offer. So it's a very, it's a small range. Just, be confident in that. But also know that as you're going shopping, take notes about what you like and what you don't like. You might see 9 homes and then realize, okay, I keep seeing this type of feature and I don't care for it. Or maybe you thought you wanted a big yard and realize I don't feel like maintaining this. Scratch that yard off the list. Just give me a little, just give me a little curb appeal. That'll do, right? So these are the things that you learned as you're going shopping and as you're going through the process. Who you are on day one is completely different from who you are when you get the keys and who you are when you begin your home search. Every phase you go through in the home buying process, there's a small tweak that happens, right, within you. So just be aware. Um, Talk to your realtor about your thoughts. I like for my clients to keep it real, right? And even whoever you work with, you want to keep it real with them. You want to be honest. Let them know, hey, these types of homes, we've been seeing townhomes for a while that, it kind of fall in this category. A lot of them have been, an an end unit, right? I actually don't want an end unit anymore. I know that sounds a little crazy, but I want to be stationed right in the center of the lineup, right? Talk to your realtor about that. Be honest. Again, our thought process during all of this, it changes so frequently. Not all the time, but well, it changes frequently, but there are some things, right, that we know, okay, this is what we want. I'm not saying, don't paddle back and forth, but throughout the process, right, you're learning that the branches on your tree are starting to wither a little bit and it just changes, right? Your perspective, your thoughts. And so have that conversation with your realtor and let them help you narrow the search. The worst thing you can do is have 100 different tabs open in your head, right? We can try on so many different pairs of shoes, but only one pair of shoes really can truly, in that day for that outfit really works. And it's kind of like, house shopping, right? You can step into so many other homes. It's going to be that one home that, checks off those at that 80% of your checklist, but also feels right. When you walk in, a lot of people say you'll just know. In a way, you'll kind of know. You may not, you may, if you're like me, you might be a little skeptical, right, for everything, but for that home that is for you, you'll kind of have that inkling of a feeling that's there. Take pictures. If the seller allows, take video, make sure you're documenting. You're going to see, some homes. You're going to see some rooms and sometimes it gets a little bit confusing, especially if you're going new construction, right? All of them almost look the same at times, but at the same time, just make sure you have your own um resource reference, not resource, your own reference. And bring a tape measure. If you have a couch that's huge and I had a client that was like, hey, this living room needs to be bigger because I refuse to get another couch. This is my favorite couch. Bring that tape measure. Measure the living room, measure the kitchen, measure your bedroom, what could be your bedroom, right? And so that's the fun part, get to go shopping, get to be hands-on and really envision, can I see myself living in this home? So keep that in mind. Okay, the next part. Once you find a home and you like a home, this is where you put in an offer. Okay. So every offer is going to look different, right? Every home is going to look different. It's case by case. But here are some things that we're going to include that are just general. The offer price, when you're going to close, and cooperative compensation if the seller is taking care of it or if you would be responsible. Usually, I would say for who I've been working with, this past year, couple years, the seller typically takes care of it, maybe 9 out of 10 times. There is that 1 out of 10 where, they will say, hey, the buyer is going to be responsible, or, it's possible. But a lot of times, especially in the DMV market, sellers tend to help. and any contingencies you would need to include. So, as a first-time home buyer, it is imperative that you get an inspection. Okay, it may look good, it doesn't mean it is good. Okay, but for the most part, usually the home inspection, yes. Frank?
I hit it by mistake. I'm
Oh, no problem, no problem. Anybody else have a question? Okay, I'll continue. So yes, so home inspection and then your financing contingency, which will protect you. And I'll also let Pete get into that as we proceed. So these contingencies, it's just, it's a fence in line to keep you protected. If something doesn't look right, so for example, with a home inspection contingency in the state of Maryland, right, you have however many days it is that you put in your offer. Say you do a 5 day or a 7 day inspection contingency, you have 7 days to get that inspection done, but to also, back out of the contract and get your earnest money deposit back. Should you put an earnest money deposit down with your offer? That is also the first time you will be putting money down. It's just a seed of good faith to the seller that says, hey, I really like your home. I want your home. This is 1%. You can do more if you want to. It is at risk if you default on, on during the term of the contract. But with the right guidance and the good guidance, you will rarely be in that position. However, during that home inspection, if you do decide to back out, you will get that back. And just to give you a heads up, every home inspection is this thick. Okay. So for those of you that are anxious, for those of you that are, you worry a lot and you see that coming, it is normal. Okay. It is just a thorough evaluation of the entire home that lets you know, hey, this is what we see with the roof. This is what we see with the electricity. This is what we see with HVAC. This is what's going on with your sink. It's literally just a thorough evaluation. So do not let the amount of documentation in that home inspection stress you out. Okay. That's normal. All right. So, Jackie, are we good on time?
You are good to keep going, but we should be moving on in a little bit.
Okay. Okay. Perfect. All right. So here is the offer process. If you submit your offer, the offer can be rejected. Okay. I literally had this happen this morning. It's okay. It happens, right? You can also get countered. So that means that the seller likes your offer partially and they say, hey, we see this, we want this. We'll keep half of, we'll say you offered 5.99 or say you offered 2.50, right? And they say, we want a little bit more. Can you meet us at 3? It's your decision, right? You and your realtor talk about that and figure out, do the comps in the area and figure out what's the best strategy for you, and where you can meet. So that would be a counter. And then once it is countered, and once the seller accepts, the contract will then become ratified, which means you guys are now officially under contract. Both parties have accepted, and now you can move into your inspections. The inspections, again, it depends on how many days you put in the contingency. Should there be one, you're able to back out during that period. That's usually done within the first week and done right after you submit that earnest money deposit. Right after that, okay. And here's the thing with inspections. With the inspection, you can ask the seller if something comes back and it's a red flag. That's the only time I will recommend, hey, let's really take a look at this. Again, remember the inspection is super thick. With that red flag, you can ask the seller to fix it. You can ask for some compensation or some closing cost, or you can just move on and say, hey, I don't care, whatever. I'll go forward, right? So those are your options. The seller has the right to say, no, I don't want to fix this. They can say, yes, I'll fix some of this, which is a counter. Or they'll say, okay, I'll take care of the entire thing. Same thing when it comes to closing cost, if you are, or yeah, or any cost that you're requesting for the sale. After that, we're going to move into the appraisal. I will let Pete get into that. It's just a evaluation, right? A value is are you purchasing this property for what you're really purchasing it for? What's the value in the area? What's the real value of the home? Are you losing money on this or not? And if there is a price difference, uh, you know, there are some options, right? And again, I'll let P go into that because I want to make sure we have enough time. And after that, so the appraisal is done usually around week 3, 2.5, week 3. And so that is your step after the inspection. And then after that, your final step is the final walkthrough, which is the best part or one of the best parts. You get to meet with your realtor about 24, 48 hours before and take a look at the entire property. Is this the home that we got? Is this the home that we put in the offer? Did they take the chandelier? Did they take the fridge? Is everything that was in our contract there? Did they fix what needed to be fixed? Is it good? Is it is it exactly what we saw when we first put in that offer? And then after that, you will get ready for settlement. Make sure you rest your wrist the night before. You will be signing papers maybe about this thick, and you will get the keys to your home. And so, my friends, I believe that is all. Oh, yep. No, it is. Don't mind me. Yep. So settlement, and then yep, you move in. So remember, once you move in, you get the keys to your home. Update your address. Apply to the homestead tax credit about a week after closing. I believe April is typically the deadline every year. And then yeah, that is all, my friends. I wish you the best of luck in your home buying journey. And yes, any questions, any comments, any thoughts for our home buyers who are out there? I'll
Nothing
give this.
yet in the Q&A box, but please, now is a great time. If you have any questions for Shandi, please let us know. But while we are waiting for that, the market can be quite competitive, and it's been a seller's market, or it's been, you know, talked about as a seller's market for quite some time. How do you help your clients stay motivated if it takes a couple houses before they actually get their contract accepted?
That is such a good question. That is such a good question. And it's so real, right? Because sometimes no one likes to be told no. No one wants to be told no. And so sometimes when you see something and you realize I'm not able to move into this opportunity, yes, it can be a little dampering on someone's spirit. But how I keep my clients motivated is I like to keep it real, right? I like to have that conversation early. It's not just a smooth run, right? It can be a smooth process. But when you're running, sometimes you do need to take a break, right? Sometimes you need to sip on some water and say, hey, okay, what did I do? Every position and every phase is a learning process. And so I like to make sure I think of it like a game. Okay, let's take a break. Let's coach through this right now, right? Did we offer too low? What were the competing offers like? How did we lose if we did lose? What do we need to do? I have a client right now. Literally, she's trying to kind of lowball more than needed, and he's fully prepared, right? Has everything, but the reality is, hey, now it's it's not about what you want completely. We gotta meet the seller halfway too, right? And so it's just really reassessing expectancies, and everyone's expectancies are different, right? And so you just have to I like to be clear with communication, and just to know that what is for you, right? So if you don't get a home, that means it just wasn't your home. And that's okay because, again, what is for you, and it will come in due time.
Awesome. Thank you. And we did get a question that came in. Can you use your own inspection person, or do you have to use the realtor's recommendation?
Good question. Absolutely, you can use your own. You can use your own lender. You can use your own inspector. Yeah, you can use your own title agent if you have one. If you have your own realtor, right? Use your own realtor. So yes, to answer your question, you can use whoever you want to in the phases of the home buying process.
Great. All right. Well, for now, we're going to keep going. But if you have questions for Shandi or about the home search or about the home buying process in general, we will have more time for Shandi to be able to give us her wonderful expertise at the end of this webinar as well. So please feel free to put it in the Q&A. I know I forget my questions if I don't immediately write them down. So please feel free. And we'll hear from Shandi again in a bit. Thank you so much. And I'll hand it over to Pete.
Thank you.
Hey everybody. Shandi, great presentation there. And everyone, honestly, like this is a very exciting step because what you're doing tonight is actually setting yourself up to realize that next dream, right? The dream of owning your home, the dream of building wealth, the dream of, expanding and growing a family and doing all the things that you see people doing. Renting is a great thing, but ultimately, renting is really just basically making someone else wealthy. So, for you guys taking this first step, It's great, and you should be very proud of yourselves and know that that's great. I want to reinforce one very important thing, and that's when Shandi said, choose to work with people that are local. And I can't stress that enough because Shandi will know the neighborhoods, will know the area, will know what the values are. The same thing with a lender. A lender will be very in tuned with the partnerships. So for instance, the Maryland Mortgage Program in Fred, one of the biggest partners that we have on how to get access to funds and to money to help. So, it's super important that that you're actually working with someone that's local and that knows. Are you guys able to see my screen?
Yes, we can see it.
Okay. All right. So the very first thing that we oftentimes talk to people about is these myths about, oh my gosh, like my credit isn't perfect. You heard in Shandi's presentation that one of the first thing is to make sure that your credit is where it is. And the way that you do that is either, you go on to an annual credit report that you can get online for free. That is super important because the earlier that you start looking at that, there might be an error on your credit. But the thing that lenders have is tools that you don't have, and that's tools on how to help your credit very quickly increase. And that would make the difference. There are programs out there, but they have minimum credit score requirements. Credit score is a big part of what type of loan that you're going to get. How much can you finance and how much assistance can you get? The other big thing is everybody thinks, gosh, I need a ton of money. And the truth is there are many times that we have our borrowers working again as when you formulate your team, your lender, Shandi, your title company, what you're going to see is when you formulate that team and we all come together, it's going to be surprising how many resources that we can tap into. So this idea of 20% down is not even reality anymore. People often think, well, I just won't qualify. Well, you won't know that until you take a moment to sit down with the lender and actually, you know, accurately give them the information and they'll guide you through. Oftentimes, like I said, the earlier we start, the earlier we can address any deficiencies that you might or might not have. The other thing Shandi touched upon this is you have to make that decision on how much you can afford that monthly payment, right? So currently you're either living with family or you're renting, or whatever your housing situation is. You want to make sure that you're going to live a comfortable life beyond that, right? Nobody wants to be, you've heard the term house poor, where you're just paying for that house. I mean, that's not, the intent of taking that next step. The intent is for you to get into something that you are now again growing your own wealth, but not living a life where you're not able to go out and live a life that you want to live. And home repairs are too expensive. You're going to have to plan for those, but those are not things that are going to deter you. So we talked a little bit about what a credit score is. So on the screen, you'll see the range, right? So when you start getting into the 600 to 649 range, that's going to be really the bracket that you're going to kind of start seeing certain types of opportunities disappear, right? So, for instance, like if we need funding or assistance from the state, they have minimums. Their minimum is 640. So when I tell you that there's an opportunity here, when we pull your credit report, it instantly tells us it's a simulator that runs automatically with every credit report. That simulation tells us that we can increase it. So let's say that you are on the lower end. The best thing that we can do is establish a plan. It's like someone driving down a dark road with no headlights. You're not going to get too far. But I promise you, if you sit down with someone that has the tools and the expertise, they can guide you through that road and turn those headlights on and get you to the end. So let's talk about what goes into your credit score, your payment history, how much you owe. Oftentimes I sit with people and they're either trying to rebuild their scores or they're trying to establish credit. One of the things that most people don't understand or don't know is that when these credit scores, it's just an algorithm, it's just a scoring model that these bureaus, Equifax, TransUnion, and Experian have. It's just a computer spitting out the score. And what goes into it is all these things, your history, the amount you owe. We always tell people, with credit cards, if your limit is $1,000, you should not try, you do your best. I know that it's not always possible, but you shouldn't go above a 330% of the limit. Because once you start doing that, like if you're approaching 70, 80% of the limit, even though you do not make any late payments, it's still going to work against you. So again, credit score is very important, but the earlier you get with someone, the more opportunity you have to correct that. So maintaining favorable credit scores, Shandi mentioned it, annualcreditreport.com, pay your bills on time or even early. Don't co-sign for loans because the moment you do, if something goes wrong with them, it's happening and it's going to impact you. Closing old revolving accounts. So there's a lot of things again that we can do to kind of help. Now let's talk about, so when you're sitting with me, what are the major factors that I'm looking at, right? So when we talk about getting pre-qualified or pre-approved, they're fundamentally, these are the six major things that we're looking at. We're going to look at your income. We're going to look at your debts. We're going to look at your credit, your employment history, the property, and how much you have, your assets for the down payment, the closing costs, and the prepaids. Trust me when I tell you that one of the hardest things to overcome is really for a first-time home buyer is accessing the money for the down payment and the closing costs. But then once you realize how much help there is out there and how low the down payments actually are, you'd be shocked to know that sometimes it costs more to buy a car than it does a house. So these are the types of things that we're going to look into. If there's, when we're looking at income and debt, that's the part where we are going to zone in and it's going to be a back and forth dialogue. You're going to be telling us, hey, yes, this is comfortable, or no, this is not comfortable. That's the dialogue that we're having. So once we dial this in, then the information will go over to Shandi, and that's where she will start establishing that search for you. Like she'll know your bedrooms and your bathrooms and the square footage and the type of house. But what we're going to provide her is that top level limit, right? Is the ceiling of how we're not going to go above this number, whether it's you can't get approved for any higher, or you may set the limit because you don't want your monthly payment to be that high. So it's a dialogue, it's learning, it's exploring, and it's understanding. So this whole thing, and again, today is the very big first step, is you're starting to understand what goes into getting, and owning your own home. These are the steps. You want to do that initial consultation. Realistically, you will make your first contact with Shandi, but the very next call is going to be to a lender because we have to, at that point, do the background. We have to look at your income and all the stuff that I just mentioned. Once we get the pre-qualification, you get out there, you start looking, then you find the house, an offer is submitted, offers accepted, and then the loan process begins. Your loan will go into processing. They're the people that are going to be collecting like more current bank statements or more current pay stubs. After a processor goes to an underwriter, they're the decision makers, right? So the term pre-approval and pre-qualification, that's before an underwriter reviews it. An underwriter is the only person that can provide you with a loan commitment, which is basically the ultimate saying that, hey, we're prepared to lend you the money. Then once everything gets done, we'll go through a pre-closing consultation. We'll get the final steps and everything will be there. And then the final is just like Shandi said, it'll be closing. You'll sign your documents, you'll get your keys, and you'll get to go home to your new home. So here are the things that, we're going to be looking for: your W-2s, your pay stubs, your employment history, your checking and your savings account. And sometimes we may or may not need tax returns just depending on, what type of loan that we're doing. The residency, the history of where you've lived and where you've worked, your IDs, and we'll be checking your credit. The types of loans out there. So as we're talking, and we, meaning you and I, one of the things that I'm doing in the background is I'm trying to determine which bucket you're going to fall into. Now, what makes the difference between one over the other? Really, the main factor is your credit and your debt to income. Conventional is probably the most unforgiving one, but it's rewarding if you are the top level credit and you've got a good debt or income, so your debt ratio is lower. FHA, USDA, and VA, they're definitely more forgiving, right? They are more government backed type of loans. Conventional, you can do as little as 3% down. And like I said, you have a partner like the Maryland Mortgage Program step in and they can give you 3%, 4%, 5%, even up to 6%, depending on the type of loan that we're going after with them. FHA, 3.5%. USDA and VA, no down payment is required. Zero. That's why I'm saying if you're a veteran and you have eligibility at 100%, you would put 0% down. You would go to a partner like the Maryland Mortgage Program and get the assistance for the down payment. There are times when I have people show up at closing and literally get their earnest money deposit back at closing. So when I tell you that this is in the discovery phase, right? When I'm talking with you, all of these things are going on in my mind, trying to narrow down where we're going to land. So that's pretty much it for, what I had prepared for you guys as far as like handouts and everything. But again, things to take away: local, local, local. You're not going to get any better service than people that know the area that you're looking in, that live in Maryland, that have grown up in Maryland. To make sure that those people are tied into resources, counties, state. They all have money to throw at first-time home buyers. Take advantage of that. Start early. Absolutely start early, because the earlier you start, the better you're going to be in the long run if there's something that needs to be prepared. Because what we're doing is we literally are just laying out the road, the map for you. We're turning on those lights down this dark road, and now it becomes 100 times easier for you to get there. And then also just, do yourself a favor. Make sure that your credit is good. Sometimes people think, well, Verizon really made me mad, I'm not going to pay them. Well, guess what? They're going to get you at some point, and they typically will get you when you're trying to buy your home. So again, the opportunity is there. The resources are there. You just have to get out there, talk with the right people, formulate that team, and let your team start working for you.
Thank you so much, Pete.
You're welcome.
Currently, we do not have any questions waiting for us in the Q&A box, but please, again, if you have any questions for Pete, now's the time. Pete, you mentioned assembling your team. How early is too early, or is there such a thing to start talking to a lender?
Absolutely no such thing. And regardless of whether it's a month, 2 months, a year down the road, the earlier that you have your plan, the better prepared you will be when it's time to get out there. Because the worst thing that can happen is Shandi come to you with an opportunity and you're not ready to seize it. So there's no such thing as too early.
Great, good to know. Um, Now, there's no thing such thing as too early, but is there such a thing as the right time to buy a home? A lot of buyers, a lot of first-time buyers have been very interested in, watching interest rates and are they going to get cut? Are we going to bring them down and how they're trending? Is there a way to kind of try to time the market like that?
That is $1 million question. And if you had the answer to how to time the market, whether it's interest rates or purchase prices and stuff like that, we would not be working today. The truth is no. And honestly, sometimes people want to try and do that, but one thing has been consistent, and it's absolutely backed statistically, that home prices have continued to go up year over year over year. So where you might pick up a quarter or whatever, a half of a percent, you're going to lose it because you're now paying more for that same home than you did last year. So no, get the home. And if rates drop and that loan officer is worth their weight in gold, which is them staying in touch with you, they'll immediately tell you it's time to jump on the opportunity to lower your rate. It's not wait, wait, wait because the market keeps moving, guys. And that's one thing that hasn't changed for years now.
Wonderful. All right. With that, we're going to move on to the Maryland Mortgage Program. Thank you so much, Pete. And again, if you are thinking about something and you're like, oh, I should have asked Shandi this, I should have asked Pete this, put it in the Q&A. We will have time at the end of Frank's presentation as well. All right, take it away, Frank.
All right. Can you guys see on the website?
Yes, we can.
All right. So thank you to Maryland Realtors and to all the lending partner attending today and the realtor as well. We'd like to come together every month and give you a little bit of information regarding the Maryland Mortgage Program. And what you're looking at is our website. It says mmp.maryland.gov. We are the Maryland Department of Housing and Community Development, but our website for the Maryland Mortgage Program is mmp.maryland.gov. And I'm going to go under resources for lenders because it's typically where I go. And we can find lots of information here to help you. We can pull out our products. Our rates come out every day at 10 o'clock in the morning. This is just all of our products in one sheet. They come out at 10 o'clock every morning. MMP has two sides to it. We have a first-time advantage side, where you must be a first-time home buyer. And we have a flex side for somebody who cannot be a first-time home buyer because they owned the home before, or doesn't qualify as a first-time home buyer because maybe they're purchasing a home with somebody who doesn't qualify as a first-time home buyer. Most people tend to fall under the first-time advantage side because we have a couple different ways we can qualify a borrower as a first-time home buyer. So if you're never owned a home before, then you're truly a first-time home buyer. And that would be you haven't owned a home anywhere in the world. If you can also qualify as a first-time home buyer, if you're on a deed for your parents' house or your grandparents' house and you don't live there, you can also qualify as a first-time home buyer. Okay, so there's two ways you can qualify. The third way you can qualify as a first-time home buyer is if you're active duty military or you're a veteran and you have VA eligibility, you can qualify as a first-time home buyer as well. And the last way you can qualify as a first-time home buyer would be if you're purchasing in a targeted area. And there's some mapping tool we can get into maybe later. But basically, if you're purchasing in a targeted area, even if you owned a home last year, maybe you're going through a divorce or you need to get out of your other housing situation into new housing situation. If you're purchasing in a targeted area, you can qualify as a first-time home buyer and use any of these products here on the first-time advantage side. The first three products that we have are the same on both sides. Okay, and I do want to say for our products, you have to go through a participating lender. So the state of Maryland puts the money together through the Maryland Mortgage Program, part of the Department of Housing and Community Development. We are considered an HFA, a Housing Finance Agency. So we package loans and we put them together for partner lenders to come to us and get the money for you to be able to get a first mortgage with us and down payment assistance with us as well. So just want to be able to say that because you don't actually come to us to get the money. Your lender has already been vetted, that participates in the Maryland Mortgage Program, and they'll run the credit, they'll do their due diligence, just like he said, and they'll come to the state of Maryland when they have a borrower that qualifies for the Maryland Mortgage Program. The first-time advantage direct and the flex direct is just our lowest rate of the rate sheet, and today for our government would be 2.25, 6.25. I wish it was 2.25, 6.25. And it's a little higher on the flex side. The direct product basically comes with no down payment assistance. So basically, this would be for somebody who doesn't need down payment assistance. They're just looking for the lowest rate, or maybe that's for somebody who's getting down payment assistance from a city or a county, and they don't need our money for down payment assistance. They can get their money from Baltimore City, from any county that has it, or any city that has it within the state. So that's one way to do it. The program below it, the 6,000 series, we allow a partner match sometimes if there's an employer that participates in it, if there's a builder that participates in it, if there's a community partner such as a city or a county, we'll give you the standard 6,000. And if there is a match from a partner, we can increase our amount by another 2,500 on top of it, so it would be up to 8,500 in down payment and closing cost assistance. And that program's been around for a long time. Typically in Baltimore City, that's used often because you have lots of little programs with the Baltimore City government and University of Maryland, Johns Hopkins University, Under Armour, so on and so forth. The 3% loan product gives you 3% of the first mortgage towards down payment and closing cost assistance. It's also important to know our money can be used for either closing costs or down payment or both. Okay, so you can use it in any combination. So imagine that your seller is giving you some money towards closing costs, because typically the seller cannot give you money towards down payment. So if your seller pays some of your closing costs, you may be able to get 3% down from us, or 4% down from us, or 5% down from us for to help you with the remaining down payment and the closing costs with the Merrill Mortgage Program. If you're below 50% of AMI, and that's a specific number, maybe we'll get to it later if we have time. But basically, in the DC area, this is about 80,050. If you're below 80,050 as the borrower income, then you can get 6% of down payment assistance. In Baltimore City, that amount is 67,000. So if you're below 67,000, you can get Home Start and you can get 6% in down payment assistance. If you're over 67,000, you can go with the 5%, where the income limit is more like 184,000. So the 5%, all of our products have higher income limits. Home Start has a lower income limit. We have specialty loan products as well, and keep your eyes to the website for the next couple of months. There's going to be some changes, going to be some additions. Some new products are going to be coming online at the end of this month. We're not ready to announce. I'm not ready to announce them yet since they're not open yet. But basically, the MedPal is for Montgomery County employees who work for Montgomery County government, and that comes with a $50,000 DPA loan. They have separate income limits for that program. The Maryland Smart Buy allows first-time home buyers with student loan debt to be able to purchase a home and pay off up to 25,000. Used to be 20,000, is now up to 25,000 in that for to pay off student loan debt. So you could conceivably buy a home with the Maryland Mortgage Program. You can have an option with no DPA, an option with 6,000, and if you're below 50% of AMI, just like Home Start, you can get 6% in down payment assistance, and you can pay off up to 25,000 student loan debt. The key is that all student loan debt must be paid off. Cannot be any remaining student loan debt. So if you owe like 50, you need to pay off the difference of closing. So it may not realistically work with somebody who has 50,000 in student loan debt. But if you have like 23, 24,000, we'll give you the money to buy a home, the first mortgage, give you some down payment assistance, and pay off all your student loan debt. And you have to remain in the home for 5 years for the whole 25,000 to be forgiven. So that's for you to note as well. The Maryland Home Mobility just came back online as of July 1st, and that's for first-time home buyers with a disability or a disabled family member in the household. So the borrower doesn't have to be disabled. You could have a disabled child that lives in the home, or a kid out on the spectrum, that kind of thing. Any kind of thing could be, as long as there's a disability that can be verified. And that program can give a family up to 45,000 in a 0% deferred loan that is held deferred. So basically, there's going to be money in there for the down payment, up to 20% for the down payment, and 5% for closing costs. So basically, somebody who's disabled and is purchasing a home with the Maryland Mortgage Program can basically get into the home with $0 out of their own pocket, just about. For all the other programs, just like Pete said, you may actually get some money back at closing. That's subject to agency guidelines. That would be FHA, VA, rural housing, or conventional loan guidelines. They have their own guidelines on how much money you can get back. But we see situations where people walk away with, $1,000, $2,000, $3,000. So they may be able to get most of the money that they put up front for earnest money deposits. So these are the programs that we have. Let me click back out of that. Go run through a bit. I'm going to talk about our income limits, just because people sometimes think, well, I make too much money for this program. Well, you probably don't qualify for the Maryland Mortgage Program just fine. Now, this sheet looks pretty busy, so I'm just going to concentrate on Baltimore City, just to give you an idea. Baltimore City is fully targeted. So if you're purchasing in Baltimore City, you can always qualify as a first-time home buyer. That's why the non-targeted limit, it says NA on it. But look at the income limits for Baltimore City. Household of 1 or 2, 164,520. A household of 3 or more, 191,940. And that applies to both all the Baltimore area counties, such as Anne Arundel County, Baltimore County, Hartford County. Okay, those will have the same income limits. in even Howard County right here. So in the DC area, Montgomery County, Prince George's County have higher income limits. So look at a household of three or more in Montgomery County, 232, 540. Prince George's County is the same. We have another county that's the same as that. So counties that are fully targeted, aside from Baltimore City, we have Allegheny County, Caroline County in the Eastern Shore, Dorchester in the Eastern Shore, Kent County in the Eastern Shore, Somerset County in the Eastern Shore. So those are fully targeted, and somebody can qualify as a first-time homebuyer as well. Other counties have no targeted areas at all, such as Calvert County, Carroll County, Cecil County, Charles County, Howard County, Queen Anne's County, St. Mary's County. And aside from the income limits, there's also an asset test that applies. And really, when you talk to your lender, they can give you more information on that. But basically, you cannot have over 20% of the sales price in liquid assets. And money liquid assets could be money in checking, savings, stocks, bonds, CDs. A gift of equity and gift funds also count towards an asset test. The mapper that I talked to you about is listed right here. And you can come to this mapper anytime, plug in an address, and see if it falls in the targeted area. And if it falls in the targeted area, you will qualify as at a higher income limit. You may qualify at a higher acquisition cost. And so, or you may qualify as a first-time home buyer. So if you just plug in an address right here, just to show you how it works. So this property is located in Baltimore City, and this is where I grew up. Okay. And basically, when the lender comes in here, they look at the legend, which is the area right here, where it shows you the jurisdiction. Happens to be priority funding. I'll talk about priority funding in a second, but it's also targeted. So it's a targeted area, also priority funding, and it shows the census tract. So basically, the lender will need that information, plug it into the file. But any realtor can come into the site and plug in an address and see what happens with that. Or you can do it yourself too. So you don't need special permission to come into the mapper. You can just plug in the information. The information is from the Maryland Department of Planning. It comes to us. Anybody can use it. Marketing tools. I don't want to talk about that. You can use our program in combination with city programs and county programs. So my response to that would be to go to your participating lender that you're working with. And Pete and Fairway Independent, they're a top producing lender with the Maryland Mortgage Program. They're a gold level lender, so they're as good as anybody. You must attend and complete homebuyer education for the Maryland Mortgage Program. You can do it online. Any of these qualify, or you can do it through any HUD-approved housing counseling agency, or even the state. The HCD has a list of housing counseling agencies that you can use because housing counseling education is required with the Maryland Mortgage Program. So you have all the counties, all the cities are listed in here, and they're providers for housing counseling education. So aside from housing counseling education and income, and there's also debt to income ratios, which the lender will definitely go through those as well with you. And our minimum credit score for all of our programs is 640. So you have to be a 640 as the minimum credit score. If you have 3 scores, we'll use the middle score. If you have 2 scores, then we'll use the lowest score. And if you have 1, then we'll just use the one you have. But basically, you need a homebuyer education. The lender will determine your credit score. I pull in your credit profile and you look through your credit and come up with a number that works for the Maryland Mortgage Program. And they'll assign the debt to income ratio to it that applies to that specific program. If you go in conventional loans, if you do conventional loans, you can may be able to get a reduced coverage rate on the mortgage insurance, and that can be a substantial savings if you're able to go conventional, so on and so forth. If you're working with a realtor, aside from using the realtor that you have, we do have a partnership with Maryland Realtors for realtors that have taken a special class for that'll special certification to Maryland Realtors I forgot the name of it. I think it's Housing Opportunities Certification, HOC. Maybe Jackie can talk more about that. But basically, those are referred to MMP through Maryland Realtors, and those are realtors who have taken the class, who are been educated on some of these programs that can help you, learn about down payment assistance, and be able to work with the participating lender, so on and so forth. So there's lots of information on the website for you to be able to take a look at specialty loan products, talk about those as well. We also have FHA 203K limited. That's a new option. Basically, that would be you're able to purchase a home with a VA loan, and you may be able to get some funds also for repair, for minimal repairs, not for substantial repairs. So it's a limited 203K loan product as well. We work with employers, we
Frank,
work with
I am
builders.
sorry. We are at the time for the webinar, and I want to make sure that if anyone has any questions for the
Sure,
Q&A, that they have a chance to get that in.
no
Currently,
problem.
I'm not seeing any questions, but if there's anything burning, please let us know. We'll hang out for a second.
Okay, no problem. I'm good. I think I kind of touched on everything a little bit.
Great. Yes, all of these presenters this evening have given you outstanding information. And if you have questions about any of them, you'll be able to contact them and follow up in the email that will be sent out tomorrow. Or if you already have professionals you're working with, you can ask them questions about these things and they will be able to give you some information or at least give you where you can go to get more answers. All right, I am not seeing any questions coming through just yet. So, because we are now a little bit over on time, I'm going to go ahead and read my little script. But if we see anything pop up, I am happy to pause what I am doing and go back. So, with that being said, thank you so much for your attendance. And as a reminder, if you want to come and see another one of these webinars, our next Your Home Buying Keys webinar will be on August 20th from 6:30 to 7:30 p.m. Please share that date with anyone you think would benefit from this information or another soon-to-be home buyer in Maryland. And we would appreciate any feedback that you are interested and willing to give us. I am putting a link to a short, I promise, as short as I can make it, Google form in the chat right now, and it will be in the email follow-up tomorrow as well. Any information you have to help us improve this webinar for any other future home buyers in Maryland would be amazing and greatly appreciated. And of course, be sure to check marylandhomeownership.com for more resources and information on homeownership. We are wishing you all of the best on your journey. And if you have any questions for us, you can email us at webinar@mdrealtor.org. Thank you all so much. And thank you to our wonderful panelists for this evening. I'm not seeing any questions, so I think that is our time. Thank you all again. And if you have questions after the fact, please feel free to email us. Have a
All
wonderful
right.
evening.
Thank you.